When is it going to make sense for a small business to be a C-Corp? There's many reasons a larger business needs to do so, but a small business needs to focus on the tax savings aspects. That's the reason you would choose to be a C-Corp. This is going to be an example of when you might choose to do that. Let's say you have a short-term rental business that also within that provides certain management services to those rentals. What you have there is essentially two different businesses operating as one. Fine, unless it makes sense to do something about it. Let's say this whole business right here is structured as one of these three: LLC, sole proprietorship, a partnership, or an S-Corp. What's going to happen if they are like that is they are all going to flow directly and get taxed on your personal 1040. And well, if you have a good, successful business, what's going to happen is you're going to end up in marginal tax rates, let's say 24% or higher. If you're 24% or higher, now you're in a position where you can be thinking about whether a C-Corp might save your business taxes, because what do they operate at? If we're thinking C-Corp down here, they are taxed right now at 21%, and that could be going down in the most recent tax bill. So what can happen here? If we are thinking strategically, we can take, if this is truly a business, this management service company providing management services as a separate function to what the short-term rental acquisition business is, and you're providing those services in a way that that business can be performed separately, you can form a separate company. So you can take that management services company, boom, come up here, create a C-Corp. Now you have two separate companies. One, the short-term rental operating as one of these three up here, and then you have this C-Corp underneath. This business will pay this business for the management services, effectively reducing the income up here that flows over to your personal tax return. Now, of course, that income does get them over here, but it's getting taxed on this C-Corp over here at 21%. So if you're above 24% or above here, you can see how that math works out, right? You're saving the difference here. If that's 30 or 37% even, that's an enormous amount in potential tax savings. Now you have many other things to consider. If you are a C-Corp, those dividends, when you do eventually pay them to yourself, they end up getting taxed. So what you have to be a business owner, you have to be a proactive planner here to make this work. But as your income levels rise and these mathematical equations start to play in your favor, you can start to save an enormous amount of money. You have to be proactive about it, because if you pass up the opportunity 1 or 2, 3 years, you simply miss the opportunity for these savings, right? Enormous tax savings, 30, 40, 100 grand if you're in that type of position. Not something you want to do because you can put that money to work for you. Make sure you understand these relationships, and if you think you're in that position, consider talking to a professional. Let them know what you're thinking. See if you can get on the right track with that.